All right, so we are getting ready for our last panel of the day. So this is all that stands between you and happy hour and some more one-on-one conversation. Just to keep this interactive, I just want to see if people could raise their hands if they've learned at least one new thing that's interesting today. All right, so I think we've got literally everyone in the room. I saw a couple people in the back who didn't raise their hands. I'm going to assume it's because you weren't paying attention and not because you didn't learn anything. But that being said, this is really our last opportunity today to learn from experts and leaders in this space. And so I really appreciate everyone bearing with us. I know the 4 o'clock stretch is pretty rough, but we're going to ask for your attention and energy for about one more hour. So with that, I am excited to introduce our panel's moderator, Lorraine Spradley Wilson, the Chief Sustainability Officer at Novata, an ESG platform built to empower private companies to collect, analyze, benchmark, and report relevant data. She, too, is a proud NYU Stern alum and was honored by the Center for Sustainable Business last week for her contribution. So let's give it up for Lorraine.
That's good energy and very encouraging as we go into the last panel. So thank you. And thank you to the CSB. I have the privilege of working with this group. We've had some interesting conversations, not just in preparation for this, but throughout the year. And so just in no particular order, just in order of seating. I've got Courtney from Morgan Stanley, who's the Executive Director for Sustainable Products and Solutions. Emma from Goldman, formerly of SJF Ventures, now on the impact side at Goldman Sachs. And Bobby, CTO at Lafayette Square. So we do think there are some opportunities, some more topics to discuss today. I know it's been a jam-packed agenda, but our focus is on ESG data management and reporting. So I first wanted to talk about the 30,000-foot view, which I think you see very clearly, and talk about what innovations you're anticipating or seeing from the sustainable product perspective.
Yeah, I'm very happy to be here. Thanks to all the NYU team for hosting us today. It's been a great event, and I've been pleased to be here with several other Morgan Stanley colleagues in the room. But I would say the question on kind of what we're seeing is a timely one. We actually just celebrated the 10-year anniversary of our Institute for Sustainable Investing at Morgan Stanley, which is something we've been really proud to have for a long time and has really driven kind of our test case for what's possible in the market. So we recently put out a piece thinking about what are the trends for the next decade, right? Having had this for 10 years. And I really say at the heart of that is we are seeing obviously increased investor demand for more sustainable investing options. We're seeing this across themes. It's climate, it's natural capital increasingly, it's inclusive finance. And I think a couple key stats to kind of surface on that are we've done also a couple of really interesting surveys every couple of years out of the Institute of different types of investors, individuals, institutional investors. Our latest stats indicate 90% of global asset managers see sustainable investing growing in their portfolios. Obviously, many of you here today and my fellow panelists are seeing that as well. As we think about the next generation, our latest survey of individual investors indicate that 99% of U.S. millennial investors are interested. You can't get much higher than that. So you think about growing interest, growing tailwinds. We've talked about regulations and other things today, but those are definitely in the mix. I would say another stat was really a focus when we looked at asset owners and asset managers together. We noticed some really interesting gaps in what asset owners are looking for on data and what they're getting from asset managers. And so I think that's a really helpful backdrop for this discussion. And I think it also broadens the aperture as we think about what are ESG and impact products for the next decade. Yes, it's going to be more investment funds to deliver outcomes, but it's also going to be a suite of digital tools, technology platforms that are really going to support the growing ecosystem for impact measurement and management, helping portfolio companies get more robust data, especially when they don't necessarily have huge budgets for IT and data, helping GPs slice and dice that data for the myriad use cases we've already discussed at length throughout today's great event. And then also another cause that, or another kind of use case that I think a lot about, we have a large wealth management business, and also for a lot of the larger LPs in the room, thinking about how do you actually see data across an entire portfolio of many private markets allocations? How might you actually add that up and see where you're moving the needle as an asset owner and asset allocator? So those are some of the things that I hope to see. We're working on some of them. Many in the room are working on other ones, but I might start with that from my perspective.
Some great points there in terms of getting data out and how as an asset owner you would use the data. Bobby, the next one's for you, and that's just more focused on the technology side. So how can technology help with the data management? portion.
All right. Can you hear me? All right. I will not start with technology. I'll end with technology, right? So when you look at ESG goals or impact goals or sustainable goals, I came from, so before Lafayette Square, I spent 14 years in Goldman Sachs, where in GSAM, I managed the reference data technology team there. But what I see is, whether it's a sustainable goal, ESG goal, impact goal, revenue goal, sales goal, it should be treated exactly same, right? That's the key. When you think ESG, impact, sustainable goals are like parallel, something on the side, that's where the data collection problem starts. It has to be part of your core business model, right? Just like sales revenue you track, just like profitability you track, income, revenue, you have to think about sustainable goals similar way, right? It should be the core part of your business. Why I'm saying this, that forces you to think of it very seriously. And if it's part of your core business, as you conduct your business, you also collect data regarding sales, you also collect data, or at least put processes in place to collect data about sustainability, ESG, or impact, whatever your focus is, right? The tools are exactly same, the processes are exactly same, the domain is different, right? That's the first piece, right? If you have a very solid theory of change, then the next step is you can easily define very variable, measurable and verifiable matrices. That's where you are getting at, right? How can you measure and verify your progress over time? And that becomes very easy if you have a very well thought out theory of change, well thought out focus and goals and outcomes in mind, right? Next is data. The last piece will be technology, right? Every business is a data business. If you don't have a data strategy, I believe you will fall behind in future, right? So you need to have a data strategy. That doesn't mean you have to build everything in cloud, use the latest data lakes, all that. Even if you are managing data in Excel, if you have a conscious data strategy, you know where your data is coming from, where it is ending, what kind of matrices you are going to track, what are you going to show up in your report. That's the strategy I'm talking about. You need to have a data strategy, absolutely, because data, like I said, every business is a data business, and you must have heard the statistics that more than 90% of the data today has been collected in last 2+ years, right? So incredible data footprint right now, which can help any business, right? And the third piece is now technology. Technology is the innovation that's happening. I am not going to talk about, all about large language model, generative AI. Now generative AI and large language model is kind of synonymous to AI, but AI people are using it for a while. Statistical modeling, correlation, all that AI is being used for a while now. Of course, large language model now kind of synonymous to that. But if you look at healthcare in biotech, similar kind of modeling has been used for years now. So technology will always stay ahead of you. So what you have to be careful about, how do you again come up with your your technology strategy, right? You have a data strategy now. How you can use technology? Basically, technology is the tooling, right? It's going to help the number 1 and 2 that I just said, to make it more efficient. It'll make it more cost effective, and also with new innovations in AI, it'll take it to a different level, right? So you have to really decide based on your budget, your appetite, how do you plan your technology implementation. It's very easy to get overwhelmed and pick the wrong technology, right? In this new AI world, one of the things you have to be careful about, how do you avoid negative biases or any kind of bias in your model, right? That's why it has to be, again, very conscious effort for what kind of technology you're going to use for your particular business, for your domain. And you don't have to worry about, can technology really fit my, fit my bill or find a solution of my problem. It will always be. The innovation is way ahead of anything that we have seen. I recently was in an AWS reInvent convention. 60,000 attendees. So you can imagine the entire tech world was there. And the work that's happening, especially in the climate space, is just amazing, like geospatial work. They have actually, I saw a tool where it can visually show you that climate change is affecting the marginalized communities so much worse than rich communities, like actually marking them by red and green, in a real-time basis. So, yeah, I mean, three things, right? Have a very conscious theory of change, have a data strategy, and look at technology in a very intentional way, specific to your problem, and plan out. So that's where I'll stop.
Did you want to respond to that? Okay. So agree with you absolutely on data strategy, importance of technology, theory of change. Related to that, your data strategy today actually includes some new regulatory reporting mandates. And we talked about this on other panels today, consolidation of the voluntary reporting frameworks. And so it's challenging to be a sustainability practitioner today, just given the rapid pace of development in the space. Corporate Sustainability Reporting Directive, which touches portfolio companies, Sustainable Finance Reporting Directive, which is now impacting private markets. Where we sit at Novata, we're spending a lot of time with our clients and with the regulators, trying to make sure that we're providing the right guidance. So I would like to hear from each of you. How is regulation impacting each of you in your worlds?
I can start very quickly and then pass it down. I mean, I think we've talked about it a lot today. I think unsurprisingly at a firm like Morgan Stanley, and broadly speaking across financial services, we're no strangers to regulation. We, though, especially on ESG and sustainability, are of course spending a lot more time on this and tracking it both globally, regionally, business unit level, product level, right? There's a lot of different ways that this is impacting us, and obviously pertinent for today's discussion is, I think, the unique challenges for private companies and private markets investors. I will say one other just stat from some of the surveys we've done. I did think it was interesting that nearly 60%, over half of the institutional investors we surveyed last year, agreed that the proposed ESG regulations are going to help them better apply and use sustainability and ESG data. So I think it's a pretty interesting stat when you're past that halfway tipping point, when investors are saying, yes, this is going to be helpful on the regulatory side. So again, we've talked a lot about today in the sessions earlier around standardization, harmonization, and I think we're on a good trend, but still need to solve for that last mile, if you will, I think for private companies.
Sure, happy to go next. I'm excited to be here with you all. I guess I'm going to wear two hats today. I previously spent 6 years at a smaller venture capital firm in the impact investing space called SJF Ventures, and spent the last 6 months on the sustainable investing team at Goldman Sachs. So quite different experiences, but really grew up in impact investing at SJF and now have moved over to a firm where obviously regulation and compliance is a bigger conversation for what we're dealing with. I think the main point here on the Goldman front is really SFDR and thinking about Article 8 versus Article 9 and what that can mean for us. What was interesting was as SFDR was really coming to be at SJF, we had quite a lengthy ESG survey that we had all portfolio companies take all the time. We did it for years. We had 20 plus years of data, given SJF was started in 1999. So we found it really interesting that what we were collecting on, a lot of metrics actually out of the B impact assessment initially, correlated with what SFDR was starting to dig into. Moving over to Goldman, really the balance, I think, between private markets generally, so we have funds that are Article 8, where they are asking companies that are not impact investments for this data, that dynamic, versus our couple funds that are focused on impact investing and what that looks like as an Article 9 fund. The conversations with those portfolio companies are quite different. If they know an impact investor is joining the cap table and that there are expectations around ESG reporting as well as impact KPI reporting, that is just a very different dynamic than a company that's never thought about this before. So we're approaching all of our conversations, asks with companies as one where it's not just please give us data and have it go into this black box where we can use it for our own reporting benefits. It's really let us look at this and analyze it and come back to you with feedback on how this can make you a better company as well as serve us from a reporting standpoint with regulation.
Only thing I'll add is what Courtney was saying. if you are really serious about ESG and impact, you should go towards the regulators, not away from them. What we do, we actually publish our, so we are focused on workforce improvement. We published our numbers in our 10Q and 10Ks. Like in the filings, we put those numbers in. So for everybody to look at. So that's I think, like rightly Courtney said, that people are thinking it's more beneficial to follow those regulations in reporting, because that kind of, in a way, triggers or forces you to be very strict and disciplined about your data collection and reporting, right? So,
And maybe it also helps with resource allocation. Would you agree with that? Yeah.
We all remember who were in financial services, the MiFID regulation a few years ago, right? So I can remember the weekends and everything, just because there was a very strict line, you had a strict deadline, and it was incredible amount of work that went in there. So.
On a related point, Emma, we've talked about your work at SJF, showing value to early stage companies, showing the value of collecting the data, tracking it. Could you share more about how you use data throughout the investment life cycle in those conversations with portfolio companies?
Sure. And again, I can speak to early stage venture as well as now later stage private equity with this. The processes look very similar from a structure standpoint in how the current fund I work for and my previous fund engage with companies. I think the depths to which you can go and you can use data to inform decisions can look different in a minority position, obviously, versus when you're buying a company outright. But I think the conversation around both impact and ESG data and decision making, it starts during diligence. So we are not looking at companies, I guess you could say we are looking at companies where impact is embedded in their business model, such that as the company scales, impact inherently scales. There are, though, always impact risks associated with every company. And so we have developed at both SJF and now at Goldman really extensive, somewhat proprietary, but also obviously leaning into what the industry has really adapted. The Impact Management Project, for example, and the 5 dimensions of impact, a robust way to get to the bottom of all things impact and ESG for portfolio companies. So all that's to say, the conversation with companies and the work does not start post-close. It starts during our first call with a management team. I think diligence can vary in how a fund approaches the work with a company. So whether you're doing all the diligence yourself or you're outsourcing requests and digging into the ESG via a third party, both of those models can work. It just depends on how funds really, what work they want to take on and what they're willing to really offload to another group that they really trust. But everything that happens during diligence rolls right into post-close. So we, at Goldman, call them value creation plans. At SJF, we had a different process more around portfolio acceleration, but it's all about using that data to make better decisions and coming up with a plan across commercial aspects of a business, but also the impact work that we're willing to do with companies to really start diving in immediately based on what we learned during diligence and what we plan to collect on moving forward. So a robust set of ESG questions and metrics, as well as those impact KPIs that really tie to the business model, thinking about how those can evolve and thinking about how to use those data points to really work with companies is something that I've always focused on in my work with management teams. Companies pivot, especially in earlier stages. They launch new products. What you initially thought you might need to collect on, that can change. And so I think you have to be flexible in thinking about, okay, the core business is this. Maybe we want to add on 2 metrics, and that might lose some years of data collection for us on these other 2. But if it's no longer relevant to what the company's doing, you have to be willing to really flex to what makes the most sense as businesses evolve. So I think dashboarding when it comes to data is something that we've really focused on. How do we not only collect, but analyze and send back insights to our companies and have it be more of that collaborative process? That's always been a really big priority in our work. And then looking ahead, benchmarking our own success to what we anticipated we might be able to achieve with our portfolio companies. So maybe we're underwriting that the company will reach a certain level of outcomes in 5 years. How do we track towards that? How do we adjust? How do we think about exit and where the company should be then? So it's really iterative. It's not set in stone from the moment moment we invest. And from there, it's just let's work with the company on commercial value add. It's let's continue to think about our impact goals, how what we're collecting really lets us lean in to understanding how the company is evolving, and then making sure management teams really buy into our focus as an impact investor and not letting it be, a one-sided pull where we're constantly going to them with burdensome reporting every year.
Right. So you're focusing in on issues that are important to them that they understand will help prospects down the line. Could you talk about how it might be nuanced from one industry to another?
Sure. I know on the panel before this, quality jobs was something that came up quite a bit. And in my work experience at multiple funds with very different investment mandates across sectors, that's been a thread that has been tied throughout our work. So the goal is about how to collect on metrics that relate to workers and job quality when we first invest, and thinking about the levers we can pull over time, whether it's raising wages, which is an obvious one, or producing better benefits packages for the most vulnerable workers in a workforce, thinking about employee engagement surveys. All of those themes and acceleration projects, I think, resonate with every company. But obviously on the environmental side, there's a lot you can do around life cycle analyses. You can think about decarbonization plans. Those are metrics that then let us really plan for how we can work with companies on the environmental side. But I think the fund that I'm working for now, I should mention, is called the Inclusive Growth Fund. And our focus is more on the social impact side, investing in education and workforce, healthcare, and financial inclusion. So obviously those are quite different than companies that are developing solar projects across the country. So we really think about what is relevant from an ESG perspective, which is cross-cutting, but then where does the company sit in the market? Who are its competitors? And is it serving students versus serving, the planet as its beneficiary? Those are very different situations.
That's great. Bobby, we've talked about how you're unlocking data pre-close, and so what insights can you share with us today?
Yeah, Emma kind of touched upon that. It is part of our due diligence and underwriting process, right? It is core to while we are evaluating the companies and engaging with them to get their financials and evaluating them, we introduce them to collect data about. So our focus is workforce improvement, right? So we collect pre-close data to assess what kind of problems. So one of the focus we have is we invest in companies that are operating in low, moderate income census tract or underserved areas, or employing a majority of low, moderate income workforces, right? So we need that data as part of the diligence to understand that along with their financials, this is a company we are interested because of the impact we can create, right? Help with their workforces. So the work starts from the beginning, from the day one that we talk to them. We make it very clear that we have actually a solution where we will assess your workforce's problems in few areas and then give you additional help, right? We have vetted external third-party service providers, and we can link them to those guys depending on what problem we assess, talking to their HR people, taking surveys, as well as looking at their HR data to really understand what benefit the company is giving, where they're lacking, and can it be replenished with some external third-party help, right? All that starts from day one, right? That's why it gets easier, because they buy into that. We also focus a lot on non-sponsored deals. So the thought process there is, if they are owner-owned or founder-owned companies, they definitely care about their people. So that's another focus. So like I said, so we collect that. Then we also set this expectation that every quarter we would need that data, because unless you see a trend, you can't really figure out what you have done is actually creating impact, right? So whether it's turnover going down, productivity increasing, every quarter we actually collect that data, and we try to automate it as much as possible, depending on what kind of systems they're using, and then really track that trend, and like Emma said, show it in a dashboard so they can actually see that how that data is working, how this work is really helping with their workforce.
Very important. Anything to add, Courtney, since you're looking across all of Morgan Stanley, and then I've got another one for you.
Sure. I would just say, as we think about some of the the tools as well, maybe taking, again, the example from our wealth management business, right, where we have a very large field of financial advisors and then clients, right, who are investing across asset classes with different priorities when it comes to impact and ESG. I would say another dimension on all of this too is making a lot of this data not only relevant for the end companies, but also for the end investors. And I think there's a lot of investors who care about this space, particularly whether it's high net worth individuals, families, larger institutional asset owners. They want to understand what's material and important to them. So we've also built some systems. We've actually gotten them patented, and there's a broader impact reporting platform that we've built, which is really exciting. And I think the thing that's really led to traction with it is for clients to say, this is what matters to me, and now show me the stack of data that kind of adds up. Whether it's on the climate side, the diversity and inclusion side, the nature and conservation conversation, or broad-based ESG. So I think there's a lot of power in giving those kinds of tools and systems to investors to help make decisions that matter to them as well.
Can I follow on one thing
Sure.
Courtney mentioned? I preach this. Are there LPs in the room? I guess is one question, a couple. I think that there's been a lot of momentum in how funds are approaching work with portfolio companies. It's been all over the map for a long time. Some funds ask 2 questions to companies in terms of data. Other funds ask 100 plus. And I think with SFDR and some other regulations, there are more questionnaires that are coming out that provide useful kind of templates of metric sets to consider. I always encourage LPs to also think about the engagement from their connection point to the fund, because it's a very similar relationship in some ways to the data requests that we ask of companies. So, for years I've been doing reporting to LPs where they might have their own metric set. It might be something that bends towards the themes that they focus on. It might be 100 questions. It might differ every year. But my favorite partnership with LPs is when we can make it that dialogue that we try to make it with our portfolio companies, so we can understand, where are they trying to aggregate, where are they not, where do they just want to dig into bespoke themes, how are they using the data ultimately, like how can we be more helpful in reporting it, because it is a unique, they sit atop even more funds than our single set of portfolio companies, and we struggle with asking, 25, 50, whatever it looks like, companies for a single, metric set that they don't always have the answers to. And so I think the dynamic is quite similar sometimes, and it's even being one level up, something that gets lost a lot often. So just love when LPs are really engaged around data, metrics, how they use the data to inform their decisions. And I think to Courtney's point, tools, advice that's given from larger institutions can really be beneficial in helping the whole ecosystem measure for similar things.
Thanks. I'm going to pull that thread a bit more. And so you're talking about keeping the conversation, the dialogue open between LPs and investors, GPs, a lot of parties involved. I'd like to talk about open dialogue with industry groups. We've talked about ESG data convergence initiative today. We have worked with them closely. We've talked about regulation coming from California, coming out of Europe, watching the SEC. So how do you all in your different roles, maybe not you personally, but how do your organizations think about sharing information, collaborating, influencing both on the voluntary reporting side and the mandatory disclosure side? Feel free. It's open to the group.
Yeah, one thing we actually tell our LPs that we're going to show them in a very transparent way, what we internally jokingly call, do you know where your money slept last night, right? So when they're giving a GP their money, they should see where the investment is going. So besides the impact angle and other things, we are creating dashboards and analytics to show them where exact locations the investment is going, which locations are in, what kind of socioeconomic activity is happening in those locations. So very transparent from a place angle where actually their money is flowing, right? So it's a very important topic for some of the LPs, but for some others it might not be. But we want to be very transparent about that. So.
One industry group I always call out, and Rav Teg from their team is in the back, I see him, is one called Impact Capital Managers, or ICM in shorthand. The group really came together about 7 years ago when GPs from return maximizing impact funds in North America, so kind of a specific group of impact investors, were complaining, we're brainstorming, we're thinking about the fact that there wasn't a home for that specific group to really come together. There was the GIN that covered, broadly the impact investing space across every player in the ecosystem. There were groups like NVCA and Venture where it talked about non-impact investing as well as impact investing, CDVCA, more focused on community development. So lots of different groups out there trying to solve for this, but there was not a place for GPs of these funds to come into the room and talk about challenges, deal flow, impact management, really everything that we deal with on a day-to-day. So it was first founded by about 10 member funds. It's now grown to over 100, 120 of groups that fit this, criteria. And what I think has been amazing is that I think in itself kind of demonstrates how the industry is scaled, early stage venture all the way through PE buyout, but also the development of research initiatives, thinking about how impact investing can actually increase alpha, thinking about how to develop talent in the space, diverse talent, particularly with a fellowship they have for graduate students. So just so much has occurred, and it's even expanded into the LP world today with an LP advisory council. So always a great group to go to if you're curious on all things impact investing and kind of best-in-class impact and investing commercially standards that are really coming to the forefront of our industry.
Yeah, I'll plus one the shout out to ICM. I think they've done a great job convening that group, and one of my colleagues is on that advisory council from our wealth management business. Again, to many of the conversations we're having about how do you keep the dialogue open between different types of users and requesters of this data. I would say we've also gotten a lot out of our industry engagement with different industry groups. Since we originally stood up our Global Sustainable Finance Group in 2009, we've tried to be very thoughtful about engaging with some of the industry organizations at the ground floor in the early days so that we can both lend some voice, credibility, and perspective to emerging standards in the market, whether that is the GIN, ICM, in the broader kind of corporate sustainability space, the artist formerly known as SASB, TCFD, and others, PCAF as well, for those who really want to get into carbon accounting, but really tried to, we can't do everything, but try to pick our spots and again, lend some perspective from our lived experience as, investors, bankers, wealth managers, all facets again of what Morgan Stanley does in the impact and ESG ecosystem. But I think being involved in those industry organizations and groups, both with peers and others in the value chain, has been really helpful to keep us informed, to then keep our colleagues informed, to help drive innovation in the tools that we're building. Again, I mentioned the impact platform that we have, but we've definitely signposted to a lot of the different market standards out there. We're not looking to create yet another tool, another set of survey questions, but how can we try to put everything in one place for our kind of value chain of users where they're going to go get that information, but recognizing there are different needs. So how can we pull in the right things? And so that's been really fruitful and valuable for our effort. And again, a place where, again, we can't do everything, but there's so many great industry organizations that are really helping to kind of demystify what's out there.
One thing I wanted to add, besides the industry groups, there's another, another area that we look at closely are government agencies. There's a lot of regulation Biden administration is coming, which are focused on sustainability and environment piece primarily, right? So we closely look at that area as well to see any kind of partnership there if it's possible. So.
Definitely agree with you there, and I would just add from where I sit, it's been important to us to share feedback. So if we see one industry group popping up with a slightly different definition of something, we'll quickly share some feedback that this group over here has defined it differently, and we'd really be helping the ecosystem if we could agree. Similarly, we've provided comment letters to was SASB at the time, now IFRS, and the SEC. So just sharing our view on the particular needs of the private markets, especially as the space continues to develop, the reporting continues to develop. So before we close out, it is mid-December, and I wanted to ask about highlights for the year. And Bobby, I'm hoping that you'll share some particular needs of place-based investors as part of that.
Yeah, from the very beginning, we are, so let me step back. I think the business world as a whole has not really, realized the importance of place. I think some groups have, but the immense importance of place in almost every business that you can think of is not being realized. So we are focusing a lot on that. As I said, the one of our primary focus is investing in underserved areas, right? One of our primary focus is invest everywhere in the country. So that's again place, right? So we realized it from the very beginning. We started around November 2020. We launched the company in November 2020, and we learned that we need to get a lot of information about place, socioeconomic data about place, industry, financial. So we started collecting a lot of data. In fact, there is a lot of data free out there, right? Census collects very important, very deep data about place. So we started collecting that data, and we internally use it extensively, like identifying investment opportunities. Are there socioeconomic risk in a place where we are trying to invest? And we, as a requirement, internal requirement, we developed a tool internally as well, where our underwriters and originators can go in and type in a zip code, type in a census tract, and see a bunch of analytics about that place where they're thinking of investing. So a big focus on that, and we are actually launching that product, an online version of that product, end of December. Again, right now primarily internally used, but it has a lot of interest outside as well now, because the kind of analytics it's showing from primarily from public sources, but we have a lot of private sources as well. But 80-90% are coming from BLS, from ALS, from Census, from Urban Institute. A lot of this data is free. So, but the challenge is to put them together in one centralized place and showing correlation and analytics based on that. That's the challenge. The availability of data is easy.
Thanks, Bobby.
Sure. I think one thing that we as a firm are really proud of at Goldman this year is the formal launch of our inclusive growth strategy within our private market investing. So a little bit of history. The Sustainable Investing Group has been around now for a couple years and was first kicked off with a climate fund that closed a couple years back and has been actively investing into companies for that duration of time. I think for a fund like Goldman to step up and say that inclusive growth is also an area where we want to not only talk about and strategize at the firm level, but within the Sustainable Investing Group explicitly launch funds that are focused on social impact as well. It was something that really drew me to the organization and drew me to the opportunity. And I think that we're doing this in the lens through not just, any education company is an impact investment. That's definitely not the case. We're going really deep and carefully into what the business models look like and who the companies are serving. So thinking about affordability, accessibility for populations that might not have otherwise had, healthcare access or education access, where outcomes have been an issue for a long time. Thinking about financial services and how to get folks' credit scores up, for example. And so I think a lot of private equity funds in the impact investing space have taken a really broad approach. They're investing both in environmental and social sectors out of the same fund. But we're really excited to kick off our first fund at Goldman that's really diving deep on these particular issues and looking for companies that are solving for that.
That's great.
Maybe a few other things I'd add, and maybe for those who stick around, would love to hear all of your year-end highlights and things accomplished across the room too. But I mentioned it already, but I think having our Institute for Sustainable Investing for 10 years was a big celebration for us, and a lot of the work we've been able to put out in the surveys we've done to hopefully help inform the market and identify some gaps that we and others can help to fill. I think on the data side, we've been excited to get a couple of more awards on some of our impact reporting work. It's always nice to get that validation, both from our clients and from the market. We've also innovated with some new tools and analytics, particularly on the nature and biodiversity side. We did a really cool piece of work with the Natural Capital Project based at Stanford that's done some really great work on ecosystem footprinting. But I would just broadly say I think a lot to be done in partnership with academic institutions that can be a real partner in the market. And then I think, to the focus of today's session, I think deploying capital in the private markets. We closed a $50 million next level fund, which is focused on underrepresented tech founders. That's been building off of some great work we've done in our Inclusive Ventures Lab. We had a first close of $500 million in our 1 gigaton climate fund, which is well on its way and looking at really innovative climate solutions and tying carry to impact as well, which we think is really important from an impact standpoint in the market. And then at the firm level, we have something called our Sustainable Solutions Collaborative, which we just announced last week, our third cohort of 5 breakthrough organizations solving sustainability challenges globally. So I think a lot of innovative ways to deploy capital. Obviously, even just within private equity, there's a lot of different approaches to that. So yeah, I think excited to contribute to that across a number of pockets at Morgan Stanley.
Yeah, one other thing I would like to add. So you talked about place-based, so that's why I talked about the tool. But one of the things I said earlier that we are focused on workforce improvement. So we have actually a solution called Worker Solutions, which vets a third-party service provider, which I was mentioning. And like Emma was saying, one story I want to share. One of the third-party service provider gives 0% loan to low-income folks who live check to check. They, 60%. I think the number is 60% of Americans don't have $400 in the bank for emergencies, right? So this kind of service is very helpful. And one of the story is this person whose wife had cancer and his car broke down, and he could not fix his car to take her to the hospital, right? So this service that we provided through the Worker Solutions solution that we have, he could do that. These are some of the testimonials that we are listening and which is quite moving and so just wanted to share that.
Yeah, that is very moving. Well, I'll share just our perspective, benchmarking. So some of the team is here, but that's my favorite for the year, so I'll go with that. But the ability to contextualize the data once you've gotten it from your portfolio companies, to me, is so important. And one thing I took for granted before joining the team here, which is focused on private markets, is availability of data, ability to benchmark, and recognizing that most of the world's economic activity actually takes place in the private markets. So previously, I was focused on publicly traded companies, 50,000 of those. There are millions and millions of private companies. So really important that we get it right here. Thank you. I'm going to open it up to questions.
Come on, guys. I know it's been a long day, but you can do it.
Chandler.
I promise because you already answered my previous question. But this is a question for Courtney as well as Aaron too, looking up their sustainable products, especially for the public markets. What are the biggest data challenges, for transitioning clients to net zero? What part of the data collection process is? What are your thoughts on that, I guess?
Does anyone want to go first?
I can start and definitely welcome others. I think this is a great question. I think there's obviously, I think earlier conversations touch on just the challenges around the carbon data itself. And I think that's a big reason why we've been involved in organizations like PCAF alongside several of our peer financial institutions. Because I think if you don't measure it the same way and demand the same data of the market, not necessarily all the individual companies, but the market ecosystem as a whole, I think will be challenging as far as contextualizing the data and ultimately getting there together in the global sense of the word. I would say also really understanding, just using the word contextualizing again, like there is the pathways and the corridors on net zero, but there's also a lot of the signposts of how you're going to get there. And I think that's a really important piece of information that, you can collect. And there's a lot of different attempts at that across, public market data providers and platforms. But I think also for those, whether you're banking companies or investing in them, I think having a really sophisticated view on how you collect that information, how you have dialogue with the companies about it, to ultimately have a credible path to get there.
There's companies like IBM and others have very robust technology they're developing on collecting carbon-related data as well. So you should, if you have interest, you should explore those. So.
Bruce had a question.
Sure. Bruce?
Oh, great. Thanks. Do you have any examples of, bottom-up, where companies have, figured out some innovative way to like provide information or find information. I asked that kind of in the context of so much of this feels top down, like standards set at some global level. I'm just wondering if you have experiences with companies who like they figured out how to ask the right question, a proxy question, or have some data source that like has informed your work, like from the bottom up.
Do you want to take that one?
Sure. I'm trying to think of the best example here. Something that the industry is really now focused on today is more, this goes without saying, on outcomes and efficacy versus simple outputs and scale metrics. And so I think what I've seen companies over time start leaning into themselves. We'll meet a company and they'll have outcomes tracked in a way that I was not seeing previously. I think for a long time, they could measure the students they served because that ties to the revenue that they're bringing in oftentimes. And so there were times, and there still are, where we're educating companies on let's go beyond that and trying to pull data together and explain to them what their North Star metrics should be from an efficacy standpoint, also because it's how they're going to sell the product to new customers. Like they should be tracking this. Just, young companies don't always have the capabilities to do so. I think there have been companies, though, recently, and maybe it's because I'm looking at a bit later stage companies in my current role, where I've been really impressed with all the data they're collecting. There's one in the K-12 space that we're taking a look at right now, for example, where it's not just students served, it's not just who those students are, but it's their path towards better outcomes. It's them creating their own models to think about where, that difference that they're making should be years from now. And we can take that and we can go to other companies in the portfolio and have them even talk to one another. And so I think big part of my role is post-investment working with portfolio companies on having that bird's eye approach and connecting the dots and creating synergies between management teams. And so value can be created from like isolating impact and thinking about impact outcomes, but also just in thinking about how those inform better business across all of what our companies are doing. That's one example on the social side. I think that on the environmental side, you can create and you can have companies really do kind of product analyses of what their product is doing from a positive environmental standpoint versus the alternative. Whether it's a full LCA or not, that's one thing. But we were having our companies go through that exercise at SJF on the environmental side, and then being able to aggregate a little bit with a lot of assumptions involved, what the carbon mitigation efforts of the full portfolio were. And our LPs love that, obviously. But I think from a company perspective, it really gave them a meaningful understanding of how they were contributing in a way that they might not have otherwise tried to undergo. And a lot of that learning happened from a company to company level versus us forcing them to do much.
Only thing I will add is I completely agree with him, especially on the S side, the top-down approach doesn't really work, in my opinion. It has to be bottom-up. You have to learn how your workforce is doing, collect data at that level to really figure out in a trend finally the outcome you are going to track, right? So that's the approach we are taking as well. So in the environment place, you can actually kind of do both ways, but with social, it is more effective to do bottom up.
We had another one on this side, right? Nope. Let's open it up. Thank you.
All right. Thank you so much, Lorraine, Bobby, Emma, and Courtney again for the wonderful panel and keeping us engaged despite the late hour of the day. So I do have a few thank yous and some housekeeping to get through before we'll release you all to happy hour. But first and foremost, if anyone is missing a cell phone, there is one found in the ladies' room that is at registration, and it's been being called nonstop for the last 10 minutes. So if you are looking for it, it is at registration. No need to panic. We're good to go. And before I jump into some of the programming, I do want to conclude with a little bit of a closing thought. And the very name of the company that I co-founded, Isusu, means if you want to go fast, go alone. But if you want to go far, go together, because all of our futures are inextricably tied together. And I share this because this space of sustainable investing is very much at its infancy. And it's going to take each and every one of us coming together to bring it into this next frontier. And so I want to thank each and every one of you for being here today, being a pioneer in this space and helping us kind of take this to the next level. And hopefully, I think one of the panels had said that in 10 years, sustainable investing and investing will be the same thing. I hope that's true, but it's going to be because each of us in this room did something about it. So thank you very much for being here. And with that, I do want to thank our sponsors for the evening. We have Invest Industrial, the Omidyar Network, ADL, Glenn Mead, and our media partner, Impact Alpha. Thank you all so much for making this event possible and helping us curate such great programming. I also want to shout out to the Stern Center for Sustainable Business team and Tansi for putting this all together. So if we can do a warm round of applause for them and all the other staff. Planning events takes a lot, and so it's not lost on me and hopefully not on any of you how much effort went into curating this. Moving on into some housekeeping. Your event feedback is very important, so please take a moment to scan this code. Hopefully there's a change on the screen. To complete your event survey and share your thoughts. I'll kind of hang tight for a minute while people take the opportunity to scan this and tie it up. Yeah. Don't worry. Tansi will go after me, but I'm still going to talk for a couple more minutes and hold you all hostage for that time. All right, if for some reason you don't scan this, please find someone at CSB to make sure that you can provide the feedback. I think this is the first time this event has been done, and so we definitely want to learn from your experience on what we can do better to take it to the next level, and hopefully we can do it in future years as well. Finally, a couple other things. We hope that you'll stay connected with the CSB by signing up for our newsletter, joining our conversation on LinkedIn, and if your company is interested in working with some of the incredible students at Stern or partnering with CSB in another way, please do so. Actually, we at Isusu are signed up for the program as well, and so we'll have a Stern CSB intern over the summer and are already very excited. And then finally, I want to note that CSB is a self-funded research center operating through the generosity of those who believe our vision of a better world through better business, and contributions are essential to our ability to conduct innovative research and create space like this to share our findings. And so we would really encourage each and every one of you to consider making a donation, whether today or before the end of the year. I also believe some advisory board members, including myself, will be matching donations. So please do take time. Your dollars will go further if you donate over the next few weeks. It goes, obviously, as you can see, towards putting together great events like this. In a couple moments, we'll head down to the lobby floor for a cocktail and networking reception in the Gardner Commons. From a directional standpoint, you will take the elevators down to the first floor. You'll make a right out of the elevators, take a left down a few stairs, and then it'll be right on your left. And there will also be some staff members available to guide you through that. After Tansi gives a couple remarks to close us out, you can grab your belongings now from the coat check and bring them down. They'll be sort of like a self-service rack, or you can leave them up here and always make your way back up here to collect them when you're ready to head home from Stern for the evening. And so with that, thank you again for everything today. It's been an incredible day, and I really enjoyed being a part of it. And I will welcome Tansi back up to close us out. Thank you.
Could I have a big round of applause for Samir and all the great work he's doing, but also for Unseen? Thank you. And could I have the slide back up, the one prior? Because thank you. I also want to make sure to thank the organizations that have worked with us, both on getting this tool out to many, many GPs and LPs, inviting you to come here, but also who really curated these wonderful panels. Series, Impact Frontiers, Pre-Distribution Initiative, PRI, and Novata. Thank you so much for all the great work that you all do every single day. So thank you. I also want to just thank our moderators and our panelists who are just awesome, right? Amazing. Thank you so much. And to all of you here who are doing the great work that you're doing. So just a couple of quick thoughts. I think we heard pretty consistently from a thematic perspective, value is being created. We heard decarbonization does not destroy jobs and growth. It actually equals jobs and growth, right? We heard that quality jobs and investing in your people doesn't destroy margins, it actually grows margin. So it's a rethink that we're talking about, and we also heard that from Brad Lander and others about how our way of thinking about our accounting, we heard that from Shiva as well, the way we think about what is driving value needs to shift. And you all are in the forefront of doing that, and we at NYU Stern really a big focus of our research is about that. And so it was terrific to hear pretty consistently again that the first thing that you need to do is create smart sustainability goals, not ESG reporting metrics, smart sustainability goals that are going to help you drive impact, and that those need to be integrated into your business strategy, and that you need to be tying your financial metrics to those. You need to be integrating, and that I didn't hear enough of. So that's what we're doing with Rosie, and we need to do more of that work, which is really understanding and tracking the financial returns. So if we make all these investments in jobs, as we heard from the prior panel, we also need to be tracking regretted turnover versus unregretted turnover. What is it actually costing? What about, Costco versus Sam's Club? Sam's Club has a much higher rate of theft than Costco does. Are we building that into our financials, right? So a whole series of questions of theft by the employees, right? So really understanding how we integrate those things. We really hope we can work with all of you on that. Terrific to hear about all the tools, the expertise out there. Hope that was helpful to you. I want to reiterate and thank the offer from BSR and encourage all of you to talk to our BSR team members. I'm going to ask you to stand up one more time so during drinks you can talk to them to see. Thank you, Hugh. Is Cassie still here? All right, well, Hugh, you're going to be inundated, I'm sure. So, but we will also follow up with you via mail. Again, the offer, for those of you who weren't heard this morning, BSR is willing to work pro bono with 5 GPs to test the GP tool, to give us feedback on it, and to also write up a case with us about what you find in the results. And I think, let me just see what my last point was here. Yes, I just want to reiterate what Samir said, which is that this is, we're at a moment of massive transformation. That is scary. That is hard. There are so many forces holding us back. And we are at a moment in time in the United States that is really challenging. And the polemic that's been created is also really challenging. But the fact of the matter is that these issues that we're all confronting are here to stay. There is a huge opportunity to really make a difference together with our employees, with our investors, with our companies, with our customers, right? And so I'm looking forward to working with you all on this journey, and thank you again so much for your commitment and your engagement, and thanks to our great CSB team for all their great work too. So thank you. Drinks!